Good morning. This is Japanese Economic Review Channel. Yesterday, April 23, 2026, the Japanese equity market reached a monumental turning point. For the first time in history, the Nikkei 225 breached the 60,000-point ceiling. However, this breakthrough was met with intense intraday volatility as a massive wave of profit-taking swept through the market. Today, we reflect on the forces that drove this historic surge and the sharp correction that followed a day of unprecedented trading volume. The rally yesterday morning was fueled by strong momentum from the U.S. markets. The psychological barrier of 60,000 points was shattered early in the session, driven by a global shift toward risk-on sentiment. While this milestone represents a significant achievement for the Japanese economy, reaching uncharted territory triggered immediate defensive reactions. As we saw yesterday, investors were quick to secure gains once the historic target was met. The catalyst for yesterday's opening surge was the easing of tensions in the Middle East on the previous day. The U.S. administration's announcement of an Iran ceasefire extension stabilized dialogue regarding the Strait of Hormuz. This sparked a tech-heavy rally in the U.S., with the Nasdaq jumping nearly 400 points. Key semiconductor players like ARM and Micron led the charge, providing the essential tailwind for Tokyo's historic performance. Yesterday's intraday chart revealed a dramatic roller coaster. After hitting the 60,000 mark, a strong sense of accomplishment triggered massive future selling. The index plunged to an intraday low of 58,621, a 964-point drop from its peak by early afternoon, before rebound buying slightly curbed the losses. This volatility underscores how psychological triggers can momentarily override fundamental strength when navigating historic highs. Market participation yesterday was extraordinarily high, with the prime market's trading value reaching a staggering 8.98 trillion yen. Despite the morning's historic high, the market breadth was overwhelmingly negative. Over 70% of the market, 1,188 stocks, ended the day lower, compared to only 340 advancers. This suggests that the 60,000 peak served as a universal signal for institutional investors to rotate capital and lock in profits. We observed clear divergence in sector performance yesterday. 27 out of 33 sectors declined, led by air transport and retail giants like JAL, ANA, and 7&I. Conversely, capital sought refuge in defensive and resource-heavy sectors. Mining stocks like Inpex and real estate leaders such as Mitsubishi Estate saw gains as investors repositioned for stability amidst the broader market turbulence encountered throughout the day. The ripple effect of yesterday's volatility reached the Growth 250 index, which suffered as profit-taking trickled down from the prime market. Major names like PowerX and Astroscale saw significant contractions. However, the IPO of Inu Neko Seikatsu was a notable exception, hitting a stop high after a solid debut. This resilience suggests that there remains a healthy appetite for specific high-growth narratives, even during broader corrections. Beyond the macro volatility, corporate innovation continued yesterday. Significant announcements in enterprise AI came from Dina and Oro, focusing on organizational knowledge and automated reporting. In the consumer sector, brands like Fast Retailing and Shimamura launched strategic seasonal collections, while Matsui Securities adopted a new fintech solutions. These fundamental developments provide the long-term backbone for the market's future. To summarize, yesterday was a day defined by the gravity of the 60,000 mark. While geopolitical improvements and U.S. tech strength provided the initial push, the sheer weight of the milestone induced a temporary retreat. With the Nikkei closing at 59,140, the market has undergone a significant cleansing of positions. The focus now shifts to whether this level will transform from a ceiling into a new foundation for the Japanese economy. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.